Hey everyone, this is DayTraderRockStar, and this is a market radar video and part of the high probability watch list going into next week. Again, I always chop these videos in half. First part's going to be a market radar, and we're going to start off just talking about the markets today. I'm doing this a little bit early on Thursday. I was supposed to be out of the markets today, taking care of some personal business, but I ended up back at the office here, so I want to get started on this. And I feel it's a pretty good idea to get this out as early as I can, because Friday, tomorrow, could see some action. The market has been selling off pretty hard this morning, and the good thing is we saw this coming right from the beginning, right from this candlestick up here. For the last 4 or 5 days, we've been looking for this pullback. And yesterday, when I put out the market radar, we looked for that bounce, and then today, look for the failure. So be sure to check out yesterday's video, because we really run down. The setup here, and I'll go over it a little here, but you could actually see it when we're live yesterday when we were talking about watching this rotation. We understood that this lower trend line, we're going to get a bounce, and what happens in these bounces, just like we had back here, when you have an overall daily stochastic starting to turn down and grind down, which we are seeing here, this grind down. So whenever we see that daily stochastic momentum here shifted and pushing down, that's usually the direction of the stocks also. And when you have that directional move up, you have to move up. And this market's been extremely bullish. So calling a big pullback in the market is not the easiest thing in the world. But we did have some important signals, and all those signals added up for a pullback this week. And it's happened, and it's just great because we had the VIX, we had some shorts. It was really an okay week on trading. I have some longs that I'm still holding that are underwater with this, but we're going to actually manage those properly and try to get those back above water, because we might actually see a bounce here coming. So let's talk about this. The first thing is we have that candlestick, that candlestick that came out the day the day after the Scottish vote, the Alibaba IPO, the Friday, the iPhone release. All these events happened, and we kind of gapped up, and the market radar video said watch for the gap up and sell off, and look for a sell off. And then we had the crossover, and once we had that crossover, that's a combination of different things that were happening. There's another big thing out here too, and that was the lane divergence. And the lane divergence here with the higher high and the lower high on the stochastics, really a clear signal, something I really go by. So when we see a lane divergence, it's really important to recognize that and prepare yourself for it. And that's a great signal. And to see it in the overall markets, it's even better, because that's sometimes you get some stocks that are kind of shallow or illiquid, but when you got a major focused ETF or a great stock and stuff, and it gives you that signal, then you have to really take that signal for what it is. So we did. We got on the VIX, we got on some of the SPXU, we got on some shorts. I took the Whirlpool off today. We took the we took the VIX off. Anyway, the big issue here is now looking at daily getting oversold. So, and actually my comments before, I don't want to get sidetracked here, but the comments is having a directional trade here. The directional trade here, overbought to oversold. And as you're pushing down, you usually see that price push down. But as you're seeing this move down, you're also seeing some days, down day, and then an up day, and another up day, and then a down day, and a down day, and an up. So you see the trend here is staying within the trend, but you are getting some up days, and during those up days you get rotations on the shorter time frame. And this is a big time frame, the daily. Each candle represents a daily, but inside that daily you have a 60-minute time frame, and that during the day you have multiple hours which make up multiple candles, and you can actually probably see that. So that was on the 10th and 11th, and we go out on the hourly. You go back here to the 10th and 11th. First of all, this is the downward daily, but as you can see, this is during the daily rotation. Stochastic daily rotation during this pullback has just been pushing down. But as you see, the stochastics here on the 10th and 11th got oversold and pushed overbought levels. So that's what we were counting on yesterday. We saw the oversold level. We knew we were going to probably get a good bounce, but that bounce was going to fail. It's all written. It's all put out there even before the action, and that's exactly what happened. As of yesterday, we tapped out on the 60. That was a negative because we didn't take out new highs. The trend here is confirmed to the downside. We had that one breakout, that retracement, the bounce, and that's what charting's about. That's what trends and channels are about. How to recognize and why a channel works, and where how the stochastics work with it, momentum, and everything else that goes along with it. So now that the hourly is back into oversold level and the daily approaching, that leads us into Friday, and that's why I want to get this video out. Now we know that extended pullbacks could embed in the multiple time frames, and we could flatline. There could be news out here. It almost seems like we could easily see that happen. So we have to be extremely cautious on trying to catch falling knives and predict things. It's great to have an edge in the market like what we have now, but it doesn't mean it's a perfect opportunity to call the right thing. I mean, this market could continue to flush out, but the signs here now, and we've really taken advantage of the downside, but things are starting to look a little bit better on the daily and on the 60. Now I was saying there was a good chance of actually having a 5 down day. Well, we had that bounce, but continued into the week into Friday and seeing some more downside. But with the 60 and daily getting oversold, I want to be neutral on this next call going into Friday. I'm going to try to get this out today, but I'm also going to try to get out the watch list today, so it gives us some great setups that are setting up for next week, and we'll have them out tonight, Thursday, for tomorrow. So you'll actually have an update so you can actually prepare yourself for next week. So I'm going to try to get that out. So we're going to go over some of those stocks, but basically we're back down here on the hourly. We're on the daily. And another important thing, a big shout out to FT71, which we were discussing the markets. That 62 level on the futures. I do believe that was. If you take a look at Monetary Morphine, which is a newsletter that goes out each day, just go to monetarymorphine.com/index, and we take a look at. Let me go back over here. This is a really good newspaper, little newspaper I put out now each day. It kind of gives me the market radar for the day, economic events, the closing summary. And then right down here you see FT71 profile levels. These are volume profile levels for the week, earnings for the week, kick-ass trade for the week, anything else that's going on, Mad Money stuff, even some sports updates. But basically really great market material here. And this is, again, Monetary Morphine. You can get that at Day Trading Radio. So let's take a look at the stage 5 levels here. Here we are. You just click on that, and you could actually see we had that Fed day low right here. This is the level we were watching at 1983, and we talked about if we break down through that, it came on. We're looking at a retest of maybe 62.75, which is a gap zone high, and that 61, right in that 62 to 61 level. There's a lot of chop here, a lot of thick chop here. So this is really good information to have. And with that, and you can see the market, we could actually go back now and take a look at where we are. And you can see we're right there. And actually, we're starting to drop out of here. But we're right in that zone. And also, we're having a support 2 pivot zone here. So very, interesting levels, very dangerous levels, but an interesting level for us to start looking at some scale and some quality names, because if the market does get that bounce, this is looking like a good zone to look for, that 60 to 62 area, and we're right down there right now. So it's important to get this video out there, get it out to you, let you know what we're looking at. Again, it's a difficult area here now because the market definitely has some volume, it has some follow through. This could lead to further downside, and also we have the Jewish holiday, the lighter volume, so all kinds of things. And there's news. This market is primed up for any type of news that can move the market. And just take a look at this underlying trend line here one more time. We're coming down to retest this underlying trend line. So even on my trend lines, I like this whole area too. So this is an interesting level going into Friday. I'd watch this, and this is on the SPY actually. So I'd watch this 196 level. Might even take a shot on this if we get down to it today, because we're just getting oversold on the 60. It's a clear thing. It's an ETF that tracks the S&P. You can see the daily here getting oversold, and of course the 60, which has all these. Well, that's the SPX. Let's do the SPX. Wait, that's what I wanted to show you. Basically the same thing. It's a little bit different. You have to I got to fix those lines a little. There we go. There. Basically, that's how we're looking at that. This comes out over here. A little bit different chart between the S&P and the SPY, but not much. So we are getting oversold. We're right basically on that trend line, And like I said, by the end of the day, we could actually be seeing a bounce here. Oh, there goes Whirlpool. Whirlpool was a short, and now it's finally starting to break down. WHR was that breakdown on that short here as it crosses back over on the hourly. Pretty decent short there. We're in. All right, so where does that leave us? Well, it leaves us right there. We're going to wrap it up on the market radar and talk about stocks now. We have some great stocks, shorts, longs, and everything else. And that section's here, of course, the high probability watch list for members of Day Trading Radio. So I'll leave you there for those non-members, and hopefully you do become members, and we'll see you in the chat room.